Then we would like to welcome Enlabs and CEO Robert Andersson together with CFO Adam Jonsson. Welcome.
Thank you very much. Thank you. And good afternoon, everyone. So let's get going. My name is Robert Andersson. I have been the CEO for the company now for close to 2 years. And during these 2 years, actually, Adam has been there as well. But yesterday, we also announced Adam as our new CFO. So I think a short introduction by you is in order.
Sure. Thank you, and thank you for the confidence in me as CFO. So I've been at Enlabs for about 2 years now, in the finance department mainly, and also head of investor relations. So very happy to take on this new responsibility. Before that, I was at PwC for about 3 years. So that's short about me.
Cool. So more about the company now. Let's talk about who we are, and for you who don't know us, I always open with this slide. We are a gaming company, predominantly iGaming, and our main brand is Optibet, which is the biggest brand in the Baltics. Baltics is our core focus markets. It has strong regulations and high barriers to entry, which we'll go into detail a bit later. The headquarters is in Riga. We have also a small office here in Stockholm, but also offices in Tallinn, Vilnius, and Malta and Marbella. We employ about 220 people. Half of these are offline, which means they work in our betting shops, etc. And then we have a focused brand portfolio. And I think what is quite unusual with the company our size is that we develop and own our own technology, which is a real strength. Moving on, we have 3 business verticals. One is our business to consumer gaming operations, which is the predominant amount of revenue where we have. We also have our media business. This is what is normally called affiliation business. There's many other companies that do that. In there, we have brands such as Best Casino, for example. And then we have our silver bullet going forward, which is our business-to-business solutions when we aim to package our new platform later on. Looking at our third quarter, we're really happy with our third quarter. We did 10 million euros revenue with a 3.1 million euro EBITDA, leading us to a 31% EBITDA margin. We had 94% sustainable revenues. With that, we do mean locally taxed in locally regulated markets, which is the Baltics in our case. If we look at media, which is the other decently sized business vertical we have, we did 3,500 NDCs, and that's an increase of 149%. So how do we get there? Well, clearly we have some key strengths, and as I said, we had the high barriers to entry for competitors. Baltics is also a very fast-growing market, even though we are actually growing faster than the market. Adam will talk a little bit more about that later. Diversified revenue model. We have, as I said, a peer-leading amount of already regulated and taxed revenue. We are debt-free, and we have a very strong cash position, which also Adam will talk more about. And one thing that I now feel really confident about into 2020 is that we are starting to get an organization in place. It has taken a while to do this change of the company and get it really focused on the customer and having the senior management in place to really be able to boost growth next year. And Adam is part of that change that we announced yesterday, but we have done a lot of other changes in the organization in Q4 as well that we feel really confident is that we are now geared up for 2020. So, and in 2020, we will, of course, go to our new platform more and more. We did go to optibet.com. We did move that to our new platform as of recent. And this is, of course, the platform that we will productify down the line and hopefully get third parties on. I think this will be ready for that in the mid of 2020 to get our first client on that. And then we will start seeing revenue also grow in our solution segment. So looking at regulations and social responsibility, there's a lot of companies, they kind of take this as a selling point, while it should actually be there as a basics. Compliance, looking at compliance, we as a company, first of all, Optibet was kind of conceived in a regulated market. So it's always lived in a licensed market. Not only are we licensed in Latvia, but also in Estonia and Lithuania. and in Malta, and in Sweden, and we are a listed company. So with that comes a super big set of compliance that we have to adhere to. I'm not gonna read all these bullet points to you. You can download this presentation later if you want to study it in more detail. Social responsibility. We predominantly work with giving back to the sport community in the sense that we sponsor a lot of different leagues, a lot of different teams. We've also taken from now on, or a few months back, that if we sponsor the male team, we also aim to sponsor the female team, and sometimes we sponsor the female team and not the male team. It just simply depends on what sponsorships are available, but as a large extent as possible, try and make it as equal as possible. And of course, this is a good way for us to also be seen in conjunction with sports. So of course, it's an advertisement opportunity as well. Looking at responsible gaming, this is so self-evident that it has to be there for us, and it's built into everything we do. And considering that our platform is compliant in so many different jurisdictions, it has so many tools built into it. A lot of other companies, they give this package, you know, a name. I don't want to mention names, but they try and sell it as a product. But this is something that has to be there if you're going to be a serious player. So of course we have deposit daily limit, bet daily limit, loss daily, spend time, all of this that you really need to have to be able to work with responsible gaming. Also something that comes natural to us. Then we talk a little bit about our home market, Estonia, Latvia, and Lithuania. And in Estonia, we are number 2. We are gunning for that number 1 position. There's only one player that is bigger than us. In Latvia, we are the biggest one. We actually enjoy over a 50% market share there, so you could almost call us Svenska Spel there, which is really, really good. Gaming tax is 10%. In Estonia, gaming tax is 5%. And in Lithuania, I don't know if it's a big feat, but we have gone from 6 out of 6 to now number 5th. So we are clearly growing, and Lithuania is a really growth market for us going forward, and in 2020 we see a great opportunity there. All in all, these markets are about €1 billion in value, so there's still a lot to grow into there. And then we actually can look in more detail here. I know it's really hard to say. Again, if you need to, download the presentation. You can study this carefully. But they are hard to get into these markets. So if you look at Latvia, for example, there's only 9 licenses there. And you need to have 1.4 million euros in share capital. And then it costs an additional 200,000 euros to just apply for the license. And then it's forbidden to market. So once you're in, once you've paid all of this, it's forbidden to market your service. So we have a strong first mover advantage there. Our brand is known since 2008 there. So it's not like Sweden where it's all over TV, etc. You are only allowed to market these type of services where you sell this service. So that would be you can market your own website on your own website, kind of thing, which doesn't make much sense. If you look at Lithuania, there's another set of rules. You need to have 20 betting shops physical before you can apply for an online license. This is partly because they want to protect the jobs on the ground, so you don't run a remote gaming service and doesn't really stimulate to the work availabilities in the nation. You still need a lot of share capital. License fee is just 479 euros for some reason. They could easily have added a few zeros and nobody would have thought about that. And then you have Estonia, also €1 million. But there, the legislation about advertisement is more liberal, more like Sweden in that sense. And then, if you want, you can download this and study all of the differences in the markets. But we do have one new market now. We recently announced that we completed our transaction in Belarus. We have bought land-based operations there because it has the same prerequisite as in Lithuania. You need to have land-based operations to apply for an online license. And once in, you have to pay fees. Of course, there's $1 million that you need to deposit. But what you get is a market that is more population than the Baltics altogether. And we say that this will drive our growth. The online penetration is fairly low. and it's growing really quickly. And what's really good here is that if you look at the unlicensed competitors we then have there at the moment, because everything is unlicensed there at the moment, all of them are only offering their services in Russian. And we have a Russian is a common denominator in all our markets. So we have the infrastructure already. We have our site in Russian, and you have 25% Russian speaking in Estonia. It's about 50-50 in Latvia, and it's about 10% in Lithuania. So we do have all of that set up. So we feel quite confident that this is a market which we can address quite effectively without taking too much cost, so we can really scale into this market. And then, of course, looking at markets of interest, I'll start with Finland because that is the actual market of interest. With optibet.com, we did the transition from our old platform to our new platform, made it a lot stronger in terms of its product offering, and we will still keep doing improvements. But in 2020, we are going to go after Finland as a market. It's a very interesting market in the sense that you'd classify it as grey, but it's a big market to go after. And I think some of our competitors, for them, they are their absolute biggest market. And we have a good opportunity there, since in optibet.com, most of our clients are already Finns, actually. So we can just expand on that. In Sweden, well, you all know it's quite up and down here in Sweden with legislations and what to be and not to be. So we have a license here in Sweden. We took that. We wanted to always be prepared. We feel that this can be an opportunity in terms of M&A for us, also for our platform, but also to enter organically. But we still want to see how this market pans out before we actively do any moves into Sweden. And just rounding off before I give over to Adam to do all the details with the financials, if we look at our 3 business verticals in a bit of a more detail, the gaming one is really the locomotive that drives this company. It's the big part of our revenue. And in Q3, what we did is that we reaped the benefits of all those aggressive product rollouts that we did in the end of Q2. We really saw that made a difference. And betting actually performed better than we expected, considering that there were no World Championships during Q3. So July and August are a relatively slow month when it comes to betting. And talking about media, this is I'm happy to say that we have a good trend in the NDC, which is the new depositing clients. 75% of these are on rev share. Adam will explain more in detail of what that means later on. The NDCs are growing as good as I'd say that I'm happy with. The revenue tail is a little bit slower than I would hope. That's it. But I can clearly see that we are turning the trend of media. It's just a little bit slower than I want it to be. But then again, I'm also an impatient man. And then again, the last thing for me here, before I hand over to Adam, is our solutions. People are asking, why are you even reporting solution as a separate business area? Because it's just one service. Well, it is Score24. It's a good service, but for us, what is the real thing here coming up is that when we feel at the stage where we have our new platform ready to be productified for third party, and we are already having dialogues with a few potential customers, but we also really want to ensure that once we say yes to someone, we are ready to deliver on our promises, because otherwise there's no point. But we believe that we will start filling this vertical in our business with some exciting content in 2020. Adam, financials?
Thank you very much. Yeah, so we're already quite far into Q4, but let's take a little bit of a recap of our third quarter. So we'll start with Enlabs consolidated figures, and as Robert mentioned, we hit 2 financial milestones, which we're proud of this quarter. It's 10 million euros in revenue and 3 million euros in EBITDA. That was reached by organic growth by 7% quarter over quarter and 32% year over year. In the quarter, we had no adjusted transactions, so our EBITDA is the same as adjusted here, which grew by 8% quarter over quarter and 27% year over year, resulting in a 31% EBITDA margin. That makes us a member of that kind of a rare club of companies called 30-30, companies who grow more than 30% annually with a 30% margin. And this slide, we like to highlight how we transition from, on the left side, on how we transition from EBITDA margin to net profit margin. Only have 5 percentage points between these two KPIs, which is attributed to our amortization charge. We are completely debt-free, and in our two main markets, we have a kind of favored corporate taxation, which is paid up on dividend and not on financial result, which makes us keep this high net profit margin. On the right side, you have our EPS dynamics over time, and in Q3, we hit our highest EPS so far, with 7% growth quarter-over-quarter and 39% year-over-year. If you look at the 9-month period so far, 2019, we reached 45% growth, which is above our financial target of at least 40% EPS growth annually. This slide, we like to demonstrate our solid cash conversion. So on the left side, we compare EBITDA to operating cash flow, and on the right side, we have net profit to free cash flow. Starting on EBITDA to operating cash flow, we convert in Q3, we convert 80% of that into operating cash flow. This is a KPI we aim to get to as close as 100% as possible. Although in Q3 we have a few one-offs. We had a fine from the ABGSC, which was expensed in Q2 and paid in Q3. We also engaged in some bigger sponsorship, which was prepaid during this period. So if you look at the 9-month period instead, we get to 94% of EBITDA going to operating cash flow. On the right-hand side, net profit to free cash flow, so how much of our net results ends up in our bank account. We have in the third quarter 66% with the same one-offs as recently said, and for the 9-month period we have 80%. So to sum this up, we're really happy that we have our financial results backed up by cash flow. Try to quickly guide us through our cost components, which are expressed as percentage of revenue, and EBITDA remains as the resulting factor. So in Q3, we managed to keep our high profitability at 31% EBITDA margin and had really two bigger changes from Q2, which is our marketing that grew by 1.4 percentage points, which is attributed to our Lithuanian business, which we kind of put the gas pedal down a little bit in marketing and have our name out there. At the same time, we scaled our personnel costs, so they decreased by 1.7 percentage points. If we sum up personnel cost and other costs, which are fixed cost, that base goes up to 25%. Might seem like a quite big fixed cost base for an online company as we are, but it also shows the scalability here. We don't expect that to grow, and as we grow revenues, that will decrease as percentage of revenue. As Robert also mentioned, we have 94% sustainable revenues, which is locally taxed. So in Q3, we have 9% average gaming tax. Looking a little bit closer into each business area, we have gaming, which continue to show solid momentum. We have 6% organic growth quarter-over-quarter and 39% year-over-year. Our EBITDA grew by 7% quarter-over-quarter and 48% year-over-year, resulting in a 32% EBITDA margin. Again, 94% sustainable revenue shown by the green bar over there, and as you can see over time, it's never gone under 90%, so we have a really solid experience from these regulated markets. During the quarter, our casino and poker were the products that really fueled the growth here, with casino, with our improved mobile offering during the summer months. Also, our launch of Evolution Gaming in Estonia. On the poker side, it was our launches in Latvia and Estonia during the second quarter that fueled the growth in the third quarter. As Robert mentioned, our sportsbook, we're really happy about the performance. It was kind of flat compared to Q2, but considering July and August was really slow, we're happy with that one. If we look at the Baltic markets combined for the 9 months of 2019, they grow by 33%. We grow by 39%. So even though we're the biggest operator in the region, we keep growing faster than the market. We keep increasing our market share here. Quickly, a little bit of the underlying KPIs in gaming. On the right side, we have active customers and deposits. In our case, an active customer is a depositing customer due to local regulation. I think that's important to highlight here. Active customers declined by 1% quarter-over-quarter and grew 5% year-over-year. If you sub-segment that into the Baltics and rest of the world, we grew 13% in the Baltics and decreased 48% the rest of the world. That's due to the fact that we changed Best Casino from being a casino site to being a media site. So we lost a lot of active customers, but not really showed in the NGR. Our deposits, though, increased 7% quarter-over-quarter and 43% year-over-year. On the left side, we have average monthly revenue per customer, reached an all-time high 81 euros, up 32% year-over-year. We see this as a result of our increased marketing efforts and our improved product offering and services, which creates loyalty of our customers. Quick look at media. The turnaround continues. We're happy to still continue to see quarter-over-quarter growth by 14%. Low 6% EBITDA margin. We keep investing a lot here to make this turnaround. As mentioned, our NDC grew by 9% quarter-over-quarter and 149% year-over-year. And 75% of these are on what's called a rev share deal. So the revenues are long-term, they're sustainable, but they're also lag behind from the number of inflowing new customers. Then a quick look at our solutions. It's only 3% of group revenue right now. Stable business segment, 3% decrease on top line, 2% increase in EBITDA. 41% EBITDA margin, so very profitable business area. But as Robert mentioned, it's the future in here with our platform as a service, which is the opportunity. So to round off these financial slides, we take a look at the balance sheet as of end of Q3. 38% of our assets is our cash, 16.6 million euros. About half of our assets is intangible assets, consisting of our brands and domains, gaming platform, gaming licenses, player databases, goodwill. On the other side, we have no interest-bearing liability, so completely debt-free at 85% equity ratio. So we believe we have a really solid financial position with a strong cash and no interest-bearing liabilities. So
good.
Thanks for that, and over to
I'll round this off really quick. I see that you're stressed.
Yeah.
Financial goals, they're very easy to remember. In 2020, we will hit 20 million euros EBITDA. That in combination of organic growth and acquisitions, of course. So how will we succeed? Well, of course, we drive growth of current products, new products into new markets, and we are actively going to partake in the consolidation, which is, of course, M&A. And we take great pride in being a little bit cautious here because, of course, we have to safeguard our shareholders' money. So we make sure we do good investments. At Enlabs, we also believe we are an entertainment company. So with that said, we decided that we wanted to present our Q3 and sum up our Q3 in a bit of a different way. Some of you have seen this already. I will try and, or maybe I don't know how PC works. There it goes. We did a little bit of a film that hopefully sums up this half an hour long presentation.
Record has been broken. Welcome, world, to another uplifting interim report from Enlabs, the gaming company infusing joy and sparking change in the Baltics and beyond. This quarter has been our best one yet, and in short, it looked like this, sounded like this, and for our shareholders, it worked like this. You want numbers? Well, how about this number? Or this number? Or this number? Here at Enlabs, we like our numbers like we like our coffee. Strong, black, organic, and sustainable. In fact, our sustainable revenue is the highest in the business. Our organic growth is blooming. And just look at this EBITDA margin. But not all graphs point upwards. Our staff turnover has decreased dramatically, and we have absolute zero debt. Wait. That's good news! In other good news, Q3 was so strong we smashed our revenue milestone. And thanks to our strong cash conversion and cost control, most of that money will end up in the bank, giving us a solid cash position for future investments. But let's slow down for a second. What do you even know about the Baltic gaming market? Well, for starters, it's got some high barriers to entry, partly due to heavy regulations. The good thing for us, we're already in. Not only are we in, we're number 1 in the region, aiming for first in all 3 markets respectively. After launching Lithuania late last year, we've quickly moved up the local ladder to 5th place thanks to strategic marketing investments. Partnering up with the Lithuanian Football Association, we've gotten more media exposure than any competitor and are proud to see a 50% revenue growth quarter-on-quarter. In Estonia, we're closing in on that number 1 spot that's been our goal from the get-go, and in Latvia, we're already up there, with new content being a key driver going forward and a complementary brand soon to be launched. So what's next? Well, it's fair to say we're in for a period of growth. Our main brand OptiBet is up and running on its new Maltese license, opening up for exciting opportunities in the markets far beyond the Baltics. On the technical side of things, we're proud to be operating on our own platform and excited at the prospect of licensing it to third parties in the future. We see great potential in Belarus, having signed an LOI for acquiring a smaller operator in the market, which opens up for future online licenses. But more on that as the story unfolds. Our strong cash position opens up for further acquisitions, and we will invest wisely and when the time is right. 2020 will certainly be a very exciting year for us here at Enlabs, and our goal is to maintain our high EBITDA margins, strong organic growth, and increase EPS. That and so much more, so stay tuned for more breaking news from Enlabs. And now, let's play.
That was it.
Thank you, Robert and Adam. Unfortunately, we're running out of time, so
sorry about that.
Any time for the Q&A, but I'm sure that you will stay here some minutes after the presentation if anyone of you have questions to them outside.
Surely.
Absolutely.
Thank you.
Thank you.
Thank you.